Often imitated, never duplicated. It is the Real Money Show. Welcome back. Great to be with everyone today. Jerry joining us. Jerry Karaya, how are you?
Doing well. Jeremy, how are you doing today?
Good. A lot of great stuff happening in the market.
Yeah.
I feel like a little bit of Groundhog Day because we're going to have to do yet another review on what happens on a pullback and,
News and reviews.
how do these pullbacks work and, is it a good thing? Is it a bad thing? I want the word of the day to be counterintuitive. This is the big word of the day, counterintuitive. These type of moves in the market that we're seeing, which aren't large, gold's off, I think $40, $50, silver's down, I think $1, something like that. And these counterintuitive moves tend to happen before FOMC meetings, and they tend to happen before something bad news comes out, where we've talked about this before. The idea is you want to bring the price down so that when this news comes out that's going to push the price much higher, it gets neutralized because it was pushed down first. That way it doesn't go from $24 to $28 in silver. It goes from $22.50 up to $24. That kind of idea of neutralizing. And we've seen that over and over again. But guess what? Have you been quiet this week? Was it a quiet week for you, Jerry?
No, it's been very busy, Jeremy. Lots of buying. And the funny thing is, despite all of the pullbacks in the metals markets, we have not seen one person come in and sell any product back. So this is indicative of seeing through the smoke screens and seeing it for what it is. This is a buying opportunity. Again, this is another buying opportunity. No, we sound like broken records, but how can we not repeat all of and review all of the things that are actually in front of us, all of these realities in the market?
Oh, yeah. And it is the 13th anniversary of Lehman Brothers collapse.
Yeah.
So we'll talk a little bit about that later. This came out on Gold Telegraph. I really like following them on Instagram. They said, breaking news, demand for physical gold bullion in Germany is at its highest since at least 2009. Surprise, surprise. I think that's happening across the globe. I have noticed that supplies can quickly become lacking. You can quickly run out of product. We're doing our best, but we're cusping at this point. We're cusping. It's as orders keep coming through, we're doing our best to keep ordering product to make sure that we have it available. Mm-hmm. But I think that is a takeaway for the future, saying, this is not something you want to procrastinate about. If you've not acquired some physical precious metals for your portfolio, these type of moments are the perfect entry level. You want to buy when it's a bit lower. Your risk is lower. You've got more opportunity going forward, and you don't want to wait until the market's moving on momentum to get involved. Mm-hmm. Right? There'll be plenty of people to do that, and we'll love the business and we'll help them get involved. Yeah. But we really want people to get involved before the market's really taking off, so that way the idea is do not procrastinate.
Exactly, and not just buying low to take advantage of the top set potential. Buying here, regardless of the price, really. And to be honest with you, Jeremy, it's to be prepared with your wealth insurance. We're not here to take risks anymore. There's no more rolling the dice with our health, our wealth. This is your wealth here. We're talking about your nest egg for your children and your future of your family. You don't want to run the risk. You don't want to roll the dice with this. We've been called to be stewards of this, and we need to safeguard it first and foremost. So it doesn't really matter of what the price is doing. You need it first. This should be the foundation of anyone's portfolio because it offers zero counterparty risk, liquidity, safety, security outside of the financial system, decoupled from all of the madness that we're going to be reading into today. So just a reminder, first get the foundation of your portfolio, which is physical gold and silver, Jeremy.
The number 18778 silver and the website guildhallwealth.com. I totally agree, Jerry. It's all about foundation. I was going on a little bit of a splurge, I should say, going through some of Lynette Zhang's videos. It's been a while since I checked in with what she's up to. Yeah. I ended up listening to one from like a year ago, though, about debt. But it was talking about the foundation of the financial system, right? And as you know, I'm sure you followed her. She adheres to the idea that in 2008, the financial system died, that it was over in 2008, and then they papered over it. They tried the taper in late 2018, 2019, totally failed. And then great, we get this crisis that you're able to just throw everything out the window and not worry about it and where the money goes. And speaking of money and where it goes, I was watching this report on an Indian news channel, and they were quite critical of our prime minister,
Really?
saying, wow, the amount of hundreds of billions of dollars that the government printed that no one has any clue where it went. No clue where it went. Zero. And no one is looking into where it went. Now, I've seen the reports from the Bank of Canada, and you can kind of see where they put things right at the outset of COVID. And you can see, all these companies got bailed out, banks got money just because, people got served just because. And then it was like, well, we'll figure out how to claw back the people who didn't deserve it and those type of things. But wow, so reckless and so much money beyond conception that you say, what am I supposed to do about this? And then, and some people think, well, it doesn't matter. It doesn't matter that they printed all this money. Like, we don't see it. And you say, no, you are seeing it. Are you kidding? If you look at, prices for August, right? Let me give you some of these stats here, Jerry. Gas up 32% in August. Pork up 9.3. Furniture 8.7. Chicken 8.4. Vehicles 7.2. Appliances 5.3. If you can get them, you're going to have to wait 6 months to get them while they pack the shipping containers that are now costing, I don't know, 30,000 that used to cost 3,000, right? Yeah. All of these things. So now here's an interesting thing, and I caught from Lynette Zhang. I remember you were talking about a month ago. Remember we did a thing about hyperinflation?
Yeah.
And about how the rate at which you double the money supply.
Venezuela, right?
Right. And we gave a bunch of factors. We gave a bunch of examples of here's how fast the money supply was multiplying. Lynette Zhang was talking about that 50% a year inflation is hyperinflation. 50% a year. And if you look at these numbers where you're saying, wait a minute,
over month,
gas is up 32%, right? When something's up 9% in a year, that should be frightening. It should be frightening, right? It's no surprise that people are getting involved in the market. What are your thoughts on inflation, hyperinflation? Are we there? Are we going to get there?
Everyone knows.
Jerry, what would it look like if that were to occur? Are you worried about something like that?
Well, I'm positioned in gold, so I'm prepared. I am worried because people around me will be impacted, but we're not stupid. We all see. We don't need Canadian statistics, as Pierre Poilievre just said in his recent video. We don't need to see the Canadian CPI data, which shows a lying transitory figure, slowing down. I mean,
we got to talk about transitory in a second.
That's transitory, a small little dip in inflation figures from the government. But we don't need statistics to see that prices are going up. Maybe not at the rate at which they are hyperinflating the money printing. That has to come to roost. These figures, the prices will eventually have to start going in lockstep with how much money they have printed, and they show no signs of slowing down, despite Canada slowing down their week over week purchases of junk, pretty much, in bonds and things like that. They're printing $2 billion a week, down from $4 billion at the height of COVID. So it doesn't matter. We're not making anything. The last few weeks ago, our GDP figure came out in the negatives. So we're not even growing. So it's stagflation, and worrisome nonetheless. And this is really the top of mind for many of the Canadians that are coming to us all across Canada, by the way.
18778 and the website guildhallwealth.com. Jerry, what's in your coffee today, buddy? You're going okay. Transitory. Here's my thing about transitory, because I was thinking about this, because at a 90-year lifespan, your life is transitory. Transitory can be anything, right? If you really want it to be.
That's right.
The Fed's changed their definition of transitory from inflation's transitory because of the opening of the economy to, well, if we have a couple years of high inflation and then it goes back down to wherever we want it to go, then that would be transitory. So I love this idea now that transitory can be anything depending on your timeline, right?
Exactly.
And on a long enough timeline,
and very
everything goes to zero.
it's all poetic. I mean, this is just lingo and doublespeak that the governments love to use. And, do you want to take it at face value? Do we really take these figures year over year showing us that inflation is not here? We can't do it anymore. We're not
It's the ministry of
ducks.
it's the ministry of truth.
Yeah.
And people need to remember 1984 and read 1984
Very
and
Orwellian,
go through what he went through, which is, why is his rations of chocolate going down, and aren't they winning the war, and all of those things. Great experience to read that and to understand where we are. Unfortunately, I hope it's not being considered just a playbook.
Jeez.
The number 18778 silver, the website guildhallwealth.com. If you want to acquire some physical precious metals, you can go to guildhallpreciousmetals.com and pick up some gold and silver. Until the 24th, if you acquire some product through the e-store, you'll be entered into a draw to win 5 1-ounce silver maples. Those are beautiful and shiny, and we're running out. So go to the website, pick up some physical metal, and you will be entered into the draw to win 5 1-ounce silver maples. You can also add physical gold and silver to a registered account, and we're going to talk about the firewalls as well as the escape hatch that we have with the registered accounts, and we're going to do that in just a moment here on the Real Money Show on Global News Radio 640 Toronto. We'll be right back. And welcome back to the Real Money Show, the number 18778 silver, and the website guildhallwealth.com. Let's talk about some of the things that happened this week, because maybe not just in the gold market, but outside the gold market, it's been a very interesting week. And but let's talk about what's going on in China, because we started off the show by mentioning the fact that this is the 13th anniversary of the Lehman Brothers collapse. So let me hand it over to you, Jerry, and you can discuss what's happening in China.
Yeah, there's big trouble in Evergrande, China, Jeremy. But before that, we want to know what's been going on this week. Obviously, we saw a pullback in the metals. And we're also seeing a pullback in the share markets. The S&P index is testing some low. We're actually recording on Friday, which happens to be quad witching today, which is the expiration of a bunch of stock and futures, options on futures and things like that. So we're already under pressure. As well as FOMC next Wednesday. So keep an eye out for that, or keep your ear open for all the hot air and jaw voting from Fed Powell and company. But there's a lot of uncertainty going in over the weekend and what everything will look like come Monday. So, yeah, it's the Friday. It's not the 13th, but it's the week that it's marking the 13th anniversary of Lehman Brothers. So it's very fitting to be talking about this major event. And we remember what happened after the Lehman collapsed. It's really cemented a contagion and just a domino effect of what became the great financial crisis and probably the worst financial crashes in history. The market was so over-leveraged that time, Jeremy, and it's even worse today. And one thing happens, across the ocean, like a Greece situation. In this case, it's China. We're all going to be impacted, so we need to be ready. So this week, Bloomberg reported with their headline, their headline quote said, China's nightmare Evergrande scenario is an uncontrolled crash. They reported that Chinese authorities told major lenders to China Evergrande Group, which is the largest property developer in China, $30 billion in debt and technically defaulting, that the lenders should not expect interest payments, and they basically won't be able to pay their debt obligations due on Monday, which is the 20th of September. So what are we going to be waking up to? Obviously, China's market opens up a lot earlier than ours, so we need to be prepared for some major volatility. Not only that, we have Wednesday FOMC, so buckle down, get your bullion orders in over the weekend on the Real Money or on the website preciousmetals.com. But major events and major potential contagion effect, Jeremy.
I haven't followed the story that closely, but I did see a video about the people who were at the head offices of Evergrande, and there was sort of like a mini riot happening between the customers, and they went straight to the headquarters of Evergrande, and it was kind of a frightful scene, something you'd see out of a movie. And then the other aspect of this geopolitically is I think it was George Soros who sort of broke the news on Evergrande.
He did.
And then all of a sudden, is it Xi Jinping, I think, was saying that he thinks Soros is the most evil thing on the planet, which you're like, okay. CCP calling Soros evil.
Spy versus spy. Yeah.
Spy versus spy. They're out for themselves. Well, okay, so they're not aligned with each other. There's that for sure. Soros is definitely out for himself and wherever he can make money. So maybe he's shorting this in some way. But look, there can be contagion. It can happen from anywhere. We know that black swan events do happen. It's one of the reasons why Palantir, which is a major tech company, bought $50 million worth of physical gold, and other companies and corporations are looking to do the same. Mm-hmm. In fact, even at Guildhall, we have clients who have their own corporations, and it's a great way to store wealth within a corporation. You can open up a corporate account, put the physical gold in there. You can write off the storage as a cost of doing business, and it's a great place to put wealth in that sense. So, what do you think is the takeaway from what potentially could happen? Do you think, Jerry, in some ways, this pullback in precious metals is a precursor to this? Again, counterintuitive. When it gets stressful out there, when it's a panic out there, that's when you see the price go down, because all of a sudden something's going to hit and everyone's going to get in, and they're going to have to just, what I always say, retreat and retrench, right? I truly believe they're going to retreat and retrench on the price of gold, maybe up to 22, 23, 2,500. And that could happen anytime between now and, say, March. Mm-hmm. I think we're into the new cycle. That could take silver up to $50 and beyond. I mean, ultimately, gold and silver, the best is yet to come. What are your thoughts?
Like I said before in the show, that no one has sold their gold and silver positions. So to see gold and silver drop the way they have, this is all algorithm and a response to cover margin calls. So when you have the S&P touching lows and hitting lows, and the Shanghai indexes hitting lows, there are a lot of margin calls in this case. We just said that the markets are super over leveraged. Margin calls are happening around the clock, and this is one of the tenets and one of the benefits of having gold and silver. It's a very liquid market. Gold is the number one market cap in the world. Silver is number 7. So you have liquidity. And what you can easily do on the paper markets is just short to cover your positions. But no one, again, we talk to wholesalers all the time, around the world who also echo that no one's really selling back. People are buying. They're going long in physical gold and silver. And we're not talking about ETFs, and we're not talking about trusts, or we're not talking about certificates. They're going long on the physical.
So speaking of long on the physical, Jerry, we know that the COMEX and the bullion banks tamp down on the price. One of the big reasons that they're doing that, again, you mentioned Jerry, you mentioned Andrew Maguire last week, and sorry for the reference there, and I think I watched the same video where he was talking about the fact that they're trying to get off of the paper down to a 1-to-1 on the physical. And, we've known that, there was a bunch of paper promises for the physical. And then even the ETFs came out and said, look, we know we're not going to have enough physical, right? They put it into their paperwork,
right.
Or prospectus to say, look, we might not have enough gold or silver. We'll still take the orders, but just so you know, there's not going to be any actual physical product in there for a while, until maybe we get it, maybe we don't. Maybe we don't have to, because we've just put it out there that we don't need the physical.
Yeah.
But this idea that they're trying to get to that physical point, and they don't want the price getting out of hand while they're doing that, because that would be very costly to them. Mm-hmm. And so that's one of the other reasons why, again, you get this counterintuitive move of why isn't the price taking off during these times where inflation's running rampant, right? And you have to understand that in some ways, those bullion banks and the COMEX, while they're working against you in a way, they're also working for you, because they're keeping that window open for you to be able to buy the physical metal at these lower prices.
100%, Jeremy. We know that the LBMA banks, even though the Basel III rules came into effect, they don't necessarily have to move forward in doing it right away. I was told by an accountant that they have until December to either close those paper positions or acquire the physical asset. So this is what they're working on. And, smart money can dump, or I should say these bullion banks can continue to use their paper contracts to add more supply to the market to lower the price so they can acquire the physical at these prices. But this is going to be very temporary. The paper shorts are going to be smashed.
You mean transitory?
Very transitory.
Okay.
Yes, this is real transitory talk here, Jeremy.
Yeah, real. Yeah, it's a blip in the road. People, I love how people are taking advantage. I'm really impressed with the knowledge that people have these days with their money, with the understanding of the physical gold market.
Exactly.
Gone are the days where you had to try to explain what we're talking about on the show, but trying to explain that to people over and over and over again because you're seeing volatility in the market perhaps. But again, right now, I think people are seeing it as a gift. They're taking advantage of it. And again, once these bullion banks have taken care of their business, there's going to be a retrench. And that's why the other part I would say as well, take note of the fact that gold is actually in negative territory for the year to date. Mm-hmm. In a market where in the last 15 years, gold has only had one down year. One down year in 2013, when the narrative of, oh my gosh, Bernanke saved the world, interest rates will one day go back to normal, we're out of the crisis, right? Mm-hmm. And then gold came down. That's a part of it, but I'm
sure.
just kind of brushing with a broad stroke here. And so then you say, okay, well, wait a minute. I want to buy when gold is negative on the year. I don't want to buy when gold is up 10%. 15%, up 20% on the year, right? Last year it was up, I think, 15 or 19%, depending on the currency. You want to buy when it's down on the year so that you're ahead when the market moves back up. And it can move up next week, next month, by December 31st, by February. Like, who cares at this point? Mm-hmm. It's midterm. Mm-hmm. It's short midterm
very, very short
range on what this market can do. And then if someone says, well, I think it's going to go lower. Okay, well, take a look at what the premiums are going to look like if the market goes much lower, okay? Because I can go back to 2019 and the price goes down to $12 on silver, but you couldn't buy it for less than $18. That's a $6 premium. And those premiums, while they've fluctuated a lot,
yes,
the wholesaler premiums are fluctuating all the time. They've come down a little bit, but a low price is going to push them way up again. So this is very... it's moving a lot. There's a lot of movement in the market. Enough with my ramble. I wanted to talk about the fact that with our registered accounts, we have 2 firewalls and an escape hatch. What does that mean? It means that a lot of people, the first thing is that within our registered accounts, clients, as you know, Jerry, have direct ownership of their products. So there's no counterparty risk. But people still have concerns about what if there's, sort of a lockdown on the financial system, as you've used Jim Rickard's ICE 9 analogy. And, what happens if we're locked out of the system, or there's a banking holiday, or, the system gets taken over in some way, whatever it is, right? What if there's a panic and it locks down? The first thing that we have to note is that we're not dealing with a bank. So we're not having to deal with bail-ins. Because if it's in a registered account or a TFSA, you're with a brokerage as opposed to a bank. That's number one. Number two, their insurance is up to $1 million per client as per IROC, the Investment Industry Regulatory Organization of Canada. So that's different than the Canadian Deposit Insurance. So that's the first firewall. You're not in a bank. You're in a brokerage. Number two, you're holding it in a vault outside the banking system. So when you're holding with Brinks, for instance, or IDS, whichever one you choose, it's outside the banking system. Again, IROC approved, fully insured, backed by Lloyd's of London, but outside the banking system totally. So it's not as though these bricks are held at Scotiabank downtown, although they're not allowed to use that vault anymore. So that's a bad example. But it's not with a bank.
Right.
They're not the custodian of it. You're the custodian of it, and it's being held out of the bank. Now, what's the escape hatch? The escape hatch is you can always take delivery. You can pay withholding tax if it's an RSP or whatnot, and take delivery of that product. Yeah. Now, locked in accounts, a little bit different, right? You have to show that you need the money, you don't have any other source of income, and you have to break it.
Yeah.
But as far as the regular RSP accounts, spousal RSP, TFSA, if it got to that point where you said, look, I won't feel safe unless I take this home and I'm willing to pay those withholding taxes to do it, you have that escape hatch.
Exactly.
2 firewalls, escape hatch,
You
the
need that.
number 18778 silver, the website guildhallwealth.com. If you want to acquire a little bit of physical metal, you can go to guildhallpreciousmetals.com, and any order that goes through up until the 24th, you'll be included in a draw to potentially win 5 1-ounce silver maples. This is the Real Money Show on Global News Radio 640 Toronto, and we'll be right back. Welcome back to the Real Money Show. The number 18778 silver and the website guildhallwealth.com. We were just saying in the break, Jerry, hold your horses, because you were saying something that was right on topic with this idea of firewalls. So what was the...
Yeah, I had a brief conversation with a gent. He specializes in security, IT, safes, and video and things like that. And safes came up, and safes can either be a 15-minute delay before the police get there, or 30-minute or 45 minutes. So these were firewalls that you were talking about in the previous segment, and it just dawned on me that these 2 firewalls that we have in the RSPs are there to help you, the client, help us being in these registered plans. If things get worse and we want to get our metals out of Dodge, these firewalls in place are there to give us enough time to not only deregister your metals out of an RSP, but get that delivered, the bullion delivered, before total tyranny here in Canada. Or that's the worst case scenario. But what I mean.
People are standing up.
Exactly.
I hope they continue to stand up, and the more people you talk to, the more they're seeing through what's going on.
Right.
So we hope that wave continues. But speaking of this, it's not just an option of, oh, I got to get delivery of my physical metal. The idea of the physical metal in a different sense is that just the ownership of it alone is the purpose of, how many people are going to get caught from mutual funds or passive funds when everyone's trying to get out at one time, right? It's going to be impossible, or trying to get money out. And the idea of the metals in many respects is not about, oh, how do I eventually get it in my hand if I need it in my hand because, I'm worried about some sort of attack on my wealth in this way. Owning it is there's no counterparty risk, and so that's the place to be. You're preserving your wealth, you're protecting it. So if there was a shutdown of the financial system, don't worry about it. Your gold's there. Yeah. When the lights go back on, your gold's still there.
Exactly.
Right? But certain funds might not be.
No.
Right? An ETF, for instance, could say no redemptions.
Because those are shares.
No redemptions. We're closing the fund. We're going to give you cash.
Yeah.
Right. Or we'll give you 50 cents on the dollar, whatever it is that can happen to you. But in this case, you always own that metal. It's always 100% owned by you. And in these kind of crazy scenarios, which you could go all day trying to come up with them, I would just simplify it by saying when the lights go back on, you still have your metal. And that was the whole point, storing your wealth. That's the whole idea.
Yeah.
It's about just keeping it safe, having the insurance policy, and not worrying about it after that. And you stated that very clearly in the second segment, saying, I'm not really worried about what happens next because I've got that peace of mind. I already have the metal. Right. And
I just want the same for everyone listening. Really and truly, that's my heart. I want everyone to have that peace of mind, at least financially. Obviously, we have to worry about other things in life, but this is could be a bedrock for the future. So get the physical gold and silver in your possession or in an RSP and do it today.
Yeah, and this is about just building the foundation of your own portfolio. We're not advisors. We don't sit here saying that gold is a panacea. It's not a one size fits all for everybody. But having 10% in a portfolio is a proven method of pure diversification. So we're just here as a portion, as one outlet for your portfolio. Although I will say many people are looking around today looking at what's going on, and they don't feel comfortable in other markets. So the gold market becomes more viable in that sense.
Absolutely. And we're all heading into another issue as we're talking about this. This is the 13th anniversary of the Lehman crisis, and we know that was ultimately a debt situation that caused the issues, and that were just patched with more debt. We brought and introduced quantitative easing. And, we fast forward to today, and the beginning of COVID happened. And what did the U.S. government do? They suspended the debt ceiling, which brings our attention to the debt ceiling, which many people are calling it not a ceiling anymore, Jeremy. It's actually just a target because it always hits.
Right. And actually, I heard that they're trying to raise the debt ceiling in Canada, too.
They have to.
Yeah.
There's no choice. But yep, there's, with the prospect of, talking about tapering and increases of interest rates, how are they going to service this mountain of debt if they do that? So come mid-October, the debt ceiling will need to be addressed. First, just as a reminder, the U.S. official government debt is $28 trillion. Not including that number is all their committed but unfunded liabilities, which is future Social Security, Medicare, etc., of around $156 trillion that they simply choose not to put on their balance sheet. And which is funny because any public company would have to do so. They need to make these numbers public, but not the U.S. government. So this is not going to go down very well. And Goldman Sachs did write about their debt ceiling issues coming up. Goldman Sachs had a detailed view, but in short, they are calling this the riskiest debt limit deadline in a decade. And they need to do this relatively in a very short period of time. So this is a huge, another outlier that we have to keep in mind. And what it reminds us, so what? What does this remind us, gold investors? That a looming U.S. default pretty much reminds us that there are two traditional safe haven assets. You got gold and U.S. Treasuries. Only gold has zero counterparty risk. It's no one's liability, but buying bonds is buying debt in a world saturated with the stuff. So which one are we going to really go with here? And the answer is clear. Gold and silver have extremely limited supply, have zero counterparty risk, no paper promises whatsoever, and have proven to be the preeminent asset over 5,000 years of countless credit cycles going belly up. Prepare with gold. This is, we're entering into more uncharted territory. Debt, you got to deal with it, and debt usually goes pop.
Gold, silver, the best is yet to come. Let's talk about why gold and silver is going to be an amazing asset to hold in your portfolio in the next segment. The number 18778 silver and the website guildhallwealth.com. If you'd like to acquire some physical precious metals, you can go to guildhallpreciousmetals.com, and every order this month up until the 24th, you'll be eligible to win 5 1-ounce silver maples. Great gift. Great to just add to your stack. Look forward to seeing those orders coming through and getting you into that draw. Let's talk about the good stuff. I truly believe, Jerry, that the idea of being well positioned puts you in a place where when that wealth transfer happens, when that debt bubble pops, okay, when they start defaulting on debt, you don't want to be a part of that. You want to be in your life raft, moving on to the next financial system, and gold and silver will get you there. And gold and silver are so undervalued right now, and even more undervalued when they give us these opportunities like they have this week, that this is the time to get involved, because when the market starts taking off, gold is not going to stop at 2,500. And yes, they've thrown out numbers like 10,000. That would not surprise us at all. It could easily go much, much higher if you look at the gold to debt ratio, the gold to housing ratio, the gold Dow ratio. Understanding the value of gold, you can realize it's doing its job, but it's so undervalued right now. If gold could easily go to 2,500 in the next few weeks, in the next few months. And then from there, it's only going to keep attacking and going higher. And I think it'll just happen faster and faster and faster. And my biggest concern is that people aren't going to be able to get involved in the market. But this is going to be a wealth transfer no one's ever seen. Mm-hmm. What do you agree?
I agree wholeheartedly, Jeremy. People are taking advantage of these dips, especially smart investors. As we saw Palantir take a position in $550 million in bullion, This is a whale. This is what we call in the market a whale, which is big, an entity big enough to move a market. And we're talking about the largest market in the world. This is a $11 trillion market in gold. So it's going to take a lot, not just one entity, but it's when you have multiple people piggybacking off of the experts, the smart money. And this is what's happening. First, we saw Palantir do it. And some other good news. We had 40,000 COMEX gold contract acquired by an anonymous whale. So this is what happened back in August 10th. A new major player has appeared on the long side of the gold futures market. Raw data shows a large non-commercial trader has amassed as many as 40,000 gold contracts, the equivalent of 4 million ounces of gold, which is a cool 9.85 billion. Now, these reports are coming from Ted Butler, a preeminent market analyst who decrypts the COT reports, the Commitment of Trader reports produced by the CFTC, the Commodities Futures Trading Commission. And what he's arguing that one of the market participants it could be billionaire hedge fund manager John Paulson. And his goal, he publicly stated that he intends to leverage a long gold position to gain a return of 25 to 50x on his original outlay. And this is the very guy who is John Paulson. He's the investor who leveraged positions during the great financial crisis to the tune of 20 billion betting against subprime mortgages. So this is smart money heading into gold, long, and betting against gold shorts. So this is another facet of the gold market that needs to be destroyed, which is the shorts. And this is a major player, not one person, but many people, just like John Paulson, will be piggybacking off of this move and jumping into gold, putting immense pressure on the gold market, putting immense pressure on the shorts. And this is going to exacerbate into the biggest market move in gold that we've ever seen before, that can ever be witnessed. Gold and silver are a spring being pulled back, even just inverted spring, ready to just take off, Jeremy. So this is explosive news coming from Ted Butler. Kudos to him once again, coming up with the data that we so need. We know the fundamentals, but every now and again we need some technicals. We need some behind the scenes look as to what the big money institutions are doing.
Yeah, and speaking of technicals, they were talking as you know, I was going through some Lynette Zhang stuff, which is great. She's awesome, and they were talking about the cup and handle.
Oh, nice.
And I was like, oh, Jerry should be here. Jerry should be on her show talking about it. So yeah, it's coming. It's coming. Have some patience if that's what is required. At the end of the day, you're going to be so happy with your positions. I know that whenever the price starts to move much, much higher, you always think, I wish I had more of a position in the market. So take these opportunities when they're handed to you. We had one back in August, right? The employment numbers came out and they looked good. And then that made the dollar strong, and all of a sudden gold got hit. And 3 weeks later, less than 2 weeks later, gold was already back up above $1,800. And then bad employment numbers came out and gold took off even further. And then they've tamped it back down. And again, I think this is a counterintuitive move. I think something's up. Yeah. Something's going to happen, something that would push the market much, much higher. And these are the times, the fall, right? Mm-hmm. This is when stuff can really happen in the market. So it's an exciting time. I truly believe when it comes to gold and silver, the best is yet to come. The number 18778 silver and the website guildhallwealth.com. Want to thank everyone for joining us here on the show, listening. Jerry joining on the show, talking with me today, and also just all the friends that we're meeting and making along the way, and the group of great clients that have been acquiring the metals. It's just great to chat. We get lost in conversations with them a lot of the time. Yeah. And half hour goes by and you say, I really got to get back to work. But no, we're very grateful, very fortunate to have all of you guys joining us along this journey, and we're very excited about the future, and we look forward to speaking with you soon and speaking with you next week here on The Real Money Show on Global News Radio 640 Toronto.